Welcome back to Good Day. We appear to be headed for a modestly higher opening today after going off another cliff on Wall Street. Good morning to financial consultant Derrick Kinney. 3% drop in one day, and everybody's blaming it on China. My eyes are glazing over at talk about China. Yeah. We don't do that much business directly with China.
We don't. It actually accounts for about 7% of our exports, Tim. But here's the deal. A lot of investors right now are worried and anxious about their biggest retirement asset shrinking right before their eyes.
Right.
They don't know what to do about it. And so China matters for a couple reasons to the investor. First of all, there's a lot of uncertainty about their economy right now. News out yesterday, manufacturing, service industry, a lot lower than expected. Second largest economy in the world, has a big impact. But also now the Fed is considering whether to raise rates or not. All those create sort of a perfect storm for investors, and it leaves them worried about what does this mean to me?
If you really think about it, it's a little bit ridiculous, in my mind anyway, because it's not China's in a recession, it's China's going to grow 6% instead of 7%.
Right.
It's not that interest rates are going to go to 17%, they're going to go from 0 to 0.25%. Still, China's growing, just not as fast. Interest rates are still very low.
That's exactly right. The key right now is expectations. Wall Street always has very high expectations. If those are not met, it causes quite a bit of depreciation in the market. So what can investors do right now? What does this mean to them? First of all, realize the 401k is long term. There's going to be bumps in the road along the way. If a person's 50 years old now, wants to retire at 65, right, they can afford to take some risk. But let's say somebody watching is feeling really worried and anxious about, I don't want to lose any more money. So one way to put a tourniquet on that wound, if you will, is take some of the money out of your growth area, move that to like a stable value fund, but keep adding money every paycheck into the market so you're buying on the dip.
Right.
So you're preserving the big nest egg while buying some money on the lower side.
So you take a bit of a loss, you put it into a safe place, a safer fund if you have that, and everybody should have that choice, and then look at those growth stocks, the riskier stocks, the ones that fluctuate a lot more, and look at them as a deal.
That's
right
right.
now.
That's right.
Like they're having a bargain basement sale on what are pretty good companies.
That's right. That's right. The key, though, is to remember not everybody has that same perspective. If there's a sale at the local retail store, I'm going to go buy. If there's a sale on Wall Street, most people panic and want to sell.
Right.
But also realize that's not the best long-term strategy, but for the short term, it could give you some relief from that anxiety. But also remember, dollar cost averaging is the key here. Right. We're buying different prices all along the way, and long-term is definitely the best way to go.
Is the U.S. economy in good shape? Because unemployment is down. We're creating 220, 250,000 jobs every month. That's not quite enough to keep up with the growth in the population. Right. And a lot of people, older people, just got out and took early retirement. People my age said, to heck with it, I'm just going to start collecting Social Security early and take my retirement.
So you're probably, what, 30, 35?
Right,
I'm just
yeah.
guessing. But the key right now, the U.S. economy is actually showing signs of improving on a couple fronts. First of all, housing numbers still look strong. Consumer confidence still looks good. Company earnings have been a bit waffly. But the key right now is on the long-term future, things do look good, right, but they're not growing as fast as many people want, and that's the same thing with China.
Exactly.
Things are growing, but not to the pace people want. So what I think is going to happen, at least in the short term, expect a lot of volatility. We may see the market drop even further than it has, yep, and people need to expect that and prepare for that and not panic, but be smart about their choices.
We promise we won't panic. A link to Derrick's website on ours, fox4news.com. Thank you so much.
My pleasure.